So when it comes to investment properties, you have to think about how you're going to pay for it. Because unless you have all the cash, you're going to need a loan. All right. So there's different types of loans for investment properties. Here's the 5 most common ones that we deal with all the time. All right. Number one, by far, probably the most common in Fall River is your FHA loan. That's your first time buyer, government sponsored loan, low down payment, very easy to get. There are some stipulations with the property, such as condition and the amount of rents have to equal a certain formula. But that's generally the most common one. It works for 2 to 4 units, and it's an easy, simple way to get in the investing game. The drawback is you tend to got to pay a little more because there's a lot of competition. But that's FHA. Number 2, conventional financing. That's just a regular loan from a bank. I've seen them as low as 3%, as high as 25% down. Typically multifamily, you're probably at least 10% down. So a little higher down payment, but there are some benefits, right? A little more attractive offer, not as contingent on the condition or the amount of rent. It's not as important as the FHA. Number 3, VA, all right? That's for our vets. We love the vets. We support our military. That's a great one. You got to live there, 0% down. If you got a VA loan, we can make that happen for you. Best way to buy a property. Number 4, DSCR loan. So that's basically the cash flow of the property needs to equal a certain amount, and a bank will loan you the money. But you got to come with some money, right? 25% down typically, and it's strictly the cash flow. So if your finances aren't as great, maybe your credit's a little shaky, maybe your income's not totally on the books, whatever it is that you do, but you have a bunch of cash and you can put it down, you're basically a cash offer too. So it makes for as close to a cash offer as you can get. And then the last one, number 5, commercial loan. So that is typically, you can do smaller amount of units, but generally 5 or more units. We go commercial, 20 to 25% down. The terms are shorter, right? So you're, 5 to 10 year term, rates are higher, right? But, it's the only way you can buy those buildings, all right? So the loans are important. You need to understand the debt service, which is the monthly mortgage payment, and how that impacts your cash flow. The more you put down, the more cash flow you'll obviously have. All right, so if you're interested in buying investment property and you're not sure what type of loan to get, let's connect. My info is below. I look forward to speaking with you. Thanks.